rate goes up, and now you cannot compete. Why? Because it's going to be very costly for you just because of exchange rate. Because exchange rate now appreciated, and now because you are competitive, and when you sell your products to other countries, your products looks very expensive to them. So in that purpose, you plan accordingly. And which kind of planning is this? Advanced planning. For advanced planning, you must forecast the exchange rate by looking at the economic factors, by looking at the history of exchange rates. So why firm forecast the exchange rates? First of all, hedging decisions. What if we are receiving big amounts? So what happens if the exchange rate decline or exchange rate increases? So would we be able to receive the planned amount or decreased or increased amount? So risk is both plus and minus. If we receive more amount, then of course our planning is going to be disturbed. If we receive less amount, then of course our planning is disturbed. We need to revise planning then. So for this purposes, we plan for hedge. Hedge mean reducing the risk. Number two, short-term investment decisions. What if we have extra cash, substantial extra cash? So we want to make some, small profits or whatsoever. So where we want to invest those, so that if we needed those short-term cash, so we can easily cash out. And the third one is capital budgeting decisions. What if we want to buy, expand, or we want to buy an asset, invest or expand, or project bidding, and anything else. So what will happen if we win the bid? What will happen if we purchase the asset? Now we need to transfer the money, right? What kind of strategies we need to do that, or we need to implement that? All right. Then not only in relation to reducing the risk, short-term investment, capital budgeting, we also forecast the exchange rate for our earning assessments. How much we are going to remit our earning back to our head office, parent company. And of course, the sister or subordinated companies, they will earn in local currency, and when they send it, they will send it in their home currency. There are two currencies involved, so they earn it in foreign currency and then send it to the home currency. Of course, exchange rate required, and when exchange rate requires, you need to forecast. The last one is long-term financing decisions, which means MNCs that issue bonds to secure long-term funds may consider denominating the bonds in the foreign currency. So not only you receive funds as an earning, you can also receive funds as a loan. So where you find cheaper loan, you can easily ask loan from those countries. But remember that when you're paying back the interest and principal, be very vigilant whether the interest, the exchange rate is increase or decrease. For that, you forecast. Sorry. So we have a very nice example from your book, and that is the Evansville company wants to determine whether to establish a subsidiary in Thailand or not. The earnings to be generated by proposed subsidiary in Thailand would need to be periodically converted into dollars to be remitted to US, which is parent company. The capital budgeting process requires estimation of future dollar cash flows to be received by the US parent company. So these dollar cash flows are dependent on the forecast exchange rates of Thai currency, which is baht against the dollar over time. So accurate future forecasting of currency value will improve the accuracy of estimated cash flows and therefore enhancing the MNC's decision making. So not only we can use in our earning assessment, we can also use in capital budgeting that we are expanding in other countries. and how much dollars we will be receiving in each year or each quarterly remittance, so that we can plan our decisions. So these are the flowcharts representing the uses of forecasting. So forecasting can also be used for estimating the cash flows and also estimating the reduction of interest. So hedging purposes, you are minimizing the risk on your cash flows. Foreign projects also on cash flows. Foreign subsidiary earning remittance also cash flows. And now for financing, where you have a lower interest rate. So this decreases your cost of capital. And although the CNs ultimately increases the value of the firm and its market share price. Right? When value of the firm increases, it increases its value of the per share of the market. And now let's talk about the forecasting. We have talked about the importance of forecasting, the uses of forecasting. All right. Now, how actually we forecast. So there are three types of forecasting: technical, fundamental, and market-based. So let's just explore the first one, technical. So technical means which involve using historical exchange rate to predict the future exchange rate. So in this, the premise is that history or past basically predict the future, which is also in its own a limitation as well. So there may be a trend of successive daily changes, daily change exchange rate adjustment in the same direction, which would lead to continue of that trend. So simple is that if you see that the exchange rate is increasing, so this is your September. So what you predict for November? Because the trend is now increasing, so you forecast that in November it also increases because you see the previous trend. So it may happen that due to some reason it can drop, but the technical analysis is basically based on past events, past performance. So according to technical analysis, the chances that the exchange rate will increases. All right. So limitations are, first foremost limitation is that it focuses on only on near future. You can predict it for 1 month, but you cannot predict it for 2 years or 3 years because past cannot guarantee the future performance. So rarely provide point estimate or range of possible future values because it only tell you, okay, the rate will increase, but how much the estimated figures are not sometimes accurate, but rarely accurate. Okay. Technical forecasting model that work well in one period may not work well in another. So you forecasted in January that okay, after every January the price increases. Now this year it decreases. There are other factors. So technical forecasting fails, right? Because one model that predicted in past cannot be repeated here. Now the fundamental forecasting. So fundamental forecasting is based on the fundamental relationship between the economic variables of the exchange rate. So what are those economic variables? Exports, expectations, inflation, interest rate, right? So the second one is sensitivity analysis. So up till now what we have discussed, what if inflation increases in one country? But what if inflation, interest, and the government government control also increases simultaneously, all three variables changes. This is called sensitivity analysis. So more than one possible outcomes for factors exhibiting uncertainty, in which not just one variable changes, all other constant. Now all the variables changes simultaneously. What will happen? So you can also predict the forecasting using fundamental analysis, using PPP, purchasing power parity. So while inflation differential by itself is not sufficient, why? Because exchange rate does not just depend on inflation, it also depends on expectation, government control, and interest rate as well. So it gives you a rough estimate of exchange rate. But remember that this is not the accurate. Why? Because there are other variables that affect the exchange rate. So limitation of fundamental forecasting is that the timing is unknown. According to us, the value is going to increase by 2%, but maybe it takes 1 month or 18 months or 2 years or 6 months. We don't know, but it will change. We know that because fundamentals are saying that, but timing we don't know. All right. Forecast of some factors may be difficult to obtain or may be difficult to write in monetary terms. Maybe qualitative term is okay. Unemployment increases, so we say that okay, the exchange rate also increases, but how much we don't know because there is subjective element involved. Right? Some factors are not easily quantified. Regression coefficient may not remain constant. So if you are predicting using regression, so the chances are that the next year forecasting may not be accurate. All right, let's move forward.